Thank you for the invitation.
Indeed, quite a week for the Trump administration. Friday, today, meeting with U.S. big oil and Trump's plans to control Venezuela and its oil indefinitely. Do you think, and what are you hearing? Is this about U.S. oil and its profits? Is it about helping Venezuela and its oil infrastructure and its economy? What's behind all this?
Well, U.S. Right now is in the record of the oil production. It's not an increase of the oil in the U.S. market. Now the geopolitical issues, the market driven and securing access to heavy crudes for the Gulf Coast refineries, in reducing the role of rival buyers, particularly China, and the use of the oil as a political aspect to act with the Venezuelan government is part of the strategy. Now the U.S. has a real influence in the exports of Venezuela, and it's significant that Washington controls all the conditions, the licenses, the permits, the financing, the shipping, and that is a real situation. But there are a lot of risk for the oil and gas companies to invest in the Venezuelan market. That was a result of the meeting today.
Right.
There are companies like Chevron that is established in the market, but other companies that are facing a lot of risk to make business there.
Now, you're coming to us from Uruguay, so talk to us about what you're hearing in Latin America. Is the U.S. and its influence over Venezuela's exports, what kind of significance in terms of leverage does the United States have right now?
Well, that is a geopolitical movement in order to reduce the influence of other countries like China and Russia in the region, and there's an alignment of different countries regarding the position of U.S. in Venezuela, and that is a real situation in the geopolitics of the region.
Now, considering the amount of oil that Venezuela has, more than any other country on earth, could the nation meaningfully move global oil prices?
Well, if you consider the actual exports of oil of Venezuela, around less than 1 million barrels per day, the production, there is a marginal effect in the international oil prices. The effect is more a geopolitical influence in the region to establish area of influence of United States of regional resources, and create the conditions for logistics and supply of oil for the existing refineries in U.S. territory.
Right.
Most of them that were designed to operate with Venezuelan crude oil.
Yeah, you were getting at exactly what I was talking about. The fact that Venezuela has these reserves are still a very long way away from being able to produce it and then refine it. So how attractive is Venezuela's oil sector to U.S. companies? Because after years of sanctions and underinvestment, it is going to take years and years, perhaps decades, of U.S. oil giants who want to reinsert themselves into Venezuela. Will that happen? How much? I mean, it's going to take a long time and a lot of money.
Yeah, but there are different situations considering the companies. For example, Chevron has been operating in Venezuela during a long period, and is completely different the situation of Chevron than the what Exxon, for example, in the meeting presented to the U.S. government. And in that sense, Venezuela has a lot of reserves. In comparison, low production cost, and that is an important incentive to start operations in Venezuela again. But if you have a risk, political risk, if you have legal framework that is not aligned with the interest of the companies, is the situation that was presented by the Exxon CEO in the meeting today.